as you grow and you mature, you probably get to a point where you go, well, just being an employee in a company, how long can that really last for? And at some point, you've got to have a crack yourself and start a business. And trust is hard earned, but it's easily lost. The one thing for us when we look at investments is that we want to work with credible partners. It would be highly, highly unlikely for us to work with a group or make an investment on behalf of our clients into a group that we had no idea who they were and they just sort of came off the street.
Did you ever think you were going to be an entrepreneur?
If you asked me that question 10 years ago, I probably would have said no.
Private markets investments are investors can find some real value. I find the best way to learn is learn from someone who's done it before and given it a go. Hi, I'm Travis Miller, host of Grow Your Wealth podcast. Thanks for joining me here today. On these podcast sessions, we're going to talk through how certain investors have navigated the bumpy road of investing, whether it be through business or investments in general. Thanks for listening today. Today, we are thrilled to introduce our guest, Trent Doughty, a key figure in the world of private wealth management. Trent's journey is nothing short of remarkable. After a career working for global investment banks across Australia, Japan, Hong Kong, and Singapore 7 years ago, he embarked on a challenging yet rewarding venture with Kelly & Partners building out private wealth division. When he joined, the division was akin to a startup. Today, Trent is partner and director at Kelly & Partners Private Wealth. His role is pivotal in advising high net worth families, non-profits, foundations, and individuals on wholesale investment portfolios and alternative investments. A testament to Trent's expertise and vision. In our conversation today, we'll explore Trent's journey, the challenges he has faced, the strategies he has employed, and his insights into creating a successful, independent wholesale wealth offering. So tune in as we uncover the secrets to growing and managing wealth with one of the industry's most seasoned professionals, Trent Doughty. Welcome, Trent, to Grow Your Wealth podcast.
Oh, thanks for having me, Travis. It's a pleasure.
So let's kick off with something simple. Let's start at the beginning. Can you give us a potted summary of who you are and what you're currently doing at Kelly & Partners Private Wealth?
Sure. So born and bred in Sydney in the mid-70s. My mother and father had their own small business. So, came from a small business family and background. And that business was in steel and metal fabrication in Sydney's western suburbs. So, grew up in a, sort of hard-working middle-class family in Sydney's west. Got a brother called Clayton. He lives in Brisbane these days. And myself and Clayton, we attended St. Patrick's College at Strathfield. As I say, hard-working family, sports-loving family.
What do you like on the steelworks? Did they pass anything down to you?
Well, I spent a number of school holidays in the steel factory. So, it was once again, we went. We were always kind of working hard and pitching in where we could. So it was good fun.
That makes sense. Background of where you got to today.
Yeah, that's right.
Ultimately an entrepreneur.
Yeah, we'll learn a lot about business, from an early age, which was great.
Yeah, gotcha. Now, how did you come to launch the private wealth division at Kelly & Partners? And, what problem were you solving in doing it?
Yeah, look, I just mentioned there, I went to St. Patrick's College at Strathfield. So, in mid-2016, I received a phone call from an old school buddy from St. Patrick's College, Strathfield, who was the one and only Brett Kelly.
Yeah, gotcha. Yeah.
So myself and Brett, we went to high school together.
Yeah, gotcha.
And Brett had, done this amazing job over, the course of, 8 years prior to that of building this amazing network of accounting firms across Sydney. And Brett's strategy was really to provide accounting services to SMEs across the Greater Sydney area. But what Brett did, which I thought was quite unique and quite good, was that rather than just kind of sitting in the ivory tower in Sydney CBD, he actually went out to the burbs and set up offices, in Norwest and Campbelltown and Bowral and Western Sydney and that. So really was bringing those, city accounting services out to the suburbs. And I think that was a great strategy. So, I guess, Brett called me in 2016, said, look, I've built this great accounting network. What we're missing is a great wealth management division.
Makes sense.
And I guess to answer your question on the, what problem were we solving, really what I guess me and Brett saw is that we saw the Royal Commission into financial services coming down the pipeline, and we knew that was not going to end well, and we knew that it was going to shine a pretty bad light on, financial advice and financial planning. So Brett was like, look, I think a lot of our clients and people in our network are going to be coming to us, asking us for, independent, trusted advice, because, a lot of trust had been broken with the big banks and the big incumbent wealth managers.
Yeah, it's interesting. I mean, the accountant's always the trusted advisor.
Mm-hmm.
Often that's where people go to when they're not sure where to turn, and accountant's not necessarily an advisor.
That's right.
Not offering wealth services all the time. So I can see how the connection came about.
That's
and now,
right.
in your opinion, what is the secret to maintaining a competitive advantage?
Yeah, look, I think for us, you need to be different, and you just can't offer what everyone else is offering. I think that's something we're focused on in our business, and I think also too, you can't be everything to everybody.
For sure.
So I think you kind of need to be different, be unique. I think at Kelly Partners, we've always tried to be different to our competitors. A good example that was, the early adopters of the I platforms.
For sure.
And working with I partners, from an early start. So I think, our adoption of alts and that, once again, that was just setting us apart from all the other sort of, financial, not everyone, but, a vast majority of financial advice groups that are just kind of, rolling out the run-of-the-mill sort of portfolios.
Yeah, for sure. I mean, looking from the outside in, what you've done in alternative assets is really impressive, right? But what you've also done for your investors, you've given them exposure to a diversified portfolio of alternatives, something that was very hard to access in the past.
That's right.
And so looking back, you guys were an early mover. You probably didn't think it at the time.
No.
But, where you are today, it's pretty obvious.
Yeah,
So
exactly.
Congratulations. And now let's take a little bit of a step back, because the thing about this podcast, people want to hear about sort of your personal background and your career and how you got where you are today. So you can just take us through your early career journey, and then tell us what you've enjoyed most.
Yeah, sure. So actually my first job was working in the financial services sector. My first job was for a Japanese bank in Sydney called Nippon Credit Bank. So as you probably recall, all the Japanese banks in the late 80s, early 90s, they were all the rage. The Japanese economy was booming. Japan basically owned everything.
Yeah.
The Japanese banks were dominating. Like they were the huge banks. So worked in the settlements division at Nippon Credit Bank for a couple of years, and then I was lucky enough that after I'd spent a little bit of time there, they offered me a traineeship on the money market desk. So moved into treasury. Was doing short-term interest rate trading, helping out with balance sheet management, funding, FX forwards, all that sort of good stuff.
Gotcha.
So I did that for a little while, and then obviously all the Japanese banks then sort of retreated from the Australian market, and I ended up taking a job at West LB, which is one of the big German Landers banks. And working there was interesting too, because we had a quasi government guarantee from the German government. We had a AA+ credit rating, so raising money wasn't a problem.
Gotcha,
and so that was actually a really, really good place to work. And then, so I worked at West LB until 2000, and then I got a transfer with West LB to work in the Tokyo branch, to work on the balance sheet there doing non-yen funding. So and look, I guess to answer your question about what have I enjoyed doing the most about, I guess, that early part in my career, looking back, I think definitely I would say like the lifelong friendships that I've made.
Yeah.
So like, including yourself, there's some amazing people that I've met over my career. And I think, we're quite lucky in the financial services industry, and certainly in banking and finance and wealth management, that it's a pretty kind of collegiate sort of group too. And so I feel fortunate that met some incredible people.
Yeah, it's interesting. I mean, if you think about went to school with Brett, that's how your current opportunity came about. And I think that's the key part about working, is that it's important you do your job. It's important you educate yourself and study. But I think it's very important you allocate time to catch up with your mates, your friends, your family, because that network is critical, right?
Absolutely.
If you think through your contacts now, a lot of those are people you met in your first or second job. I'm sure you're
100%.
speaking to people you work with at West LB.
Yeah, no, I do. And, even guys and girls I was dealing with in the sort of, mid 90s, money market trading or trading FX forwards and that, we still catch up for lunch every now and again. And, it's really good.
The other thing I think that's interesting in your career is starting in rates.
Yes.
I spent part of my career in rates. So I just think it's just critical to understanding financial markets, understanding yield curves, and just understanding rates in general, because they're applicable across all asset classes. So I think it's quite, you probably didn't mean at the time, but starting in money markets and getting opportunity rates, I'm sure it's helped you a lot, particularly in this alternative space.
It really has, yeah. And look, I think, as you say, great building blocks and, understanding how bond markets work and funding and all that. Yeah, that's obviously critical.
Yeah, got you. And now, can you share with us 2 or 3 pivotal moments that led you where you are today? And it can be personal, it can be career, just a couple of things that turn the dial and,
Yeah, look, I think probably in career, I think probably the first one would have to be, when I was in year 11 at St. Pat's, that they said, look, they asked all the students to do a 1 week of work experience. And I thought, what am I going to do? And so I spoke to a friend of mine who was involved in money market trading and broking. And so he arranged for me to spend a week on a smoke-filled bank bill trading desk with a company called Harlow Butlers, which were like a interbank broker. Yeah. So spent a week there. I just love the fast pace, the noise, and obviously at the end of every day they go to the Oxy and have a couple of schooners. So that was quite appealing. So I think that was kind of a pivotal moment in terms of like deciding what I wanted to do with my career, and working in sort of banking and the financial sector was something that appealed to me from that sort of point, from that age. And then I guess probably the other sort of 2 pivotal moments was one in when I was in Tokyo. West LB did a restructure and was made redundant, and I took a job with Citigroup private bank in Hong Kong. And so that's where I switched from trading and global markets to private banking and wealth management. Yep. So I look back, and that was never look back, and sort of just always stayed in wealth management from that point forth. And so that was great. And working at Citigroup was amazing. That's such a great company. And, I learned a lot about that. And I guess, probably the final one was, when Brett Kelly called me up and, for sure. Asked me to join Kelly Partners. And I think that's also been really pivotal in my career, in that, going from an employee working in a big bank to then going and working, as you said, it was a startup, basically. Definitely. It was a fresh piece of paper. Not only did I learn a lot about running and starting a small business, but I think I learned a lot about myself too, because when you're just in the, that sort of comfort zone of being an employee, and then all of a sudden you just take the leap of faith, and then you're just on your own and you sink or swim, you find out a lot about yourself too.
So the funny thing about small business, if you don't make money, you don't have a job.
That's it.
You don't have a business.
Exactly.
Yeah. I mean, I think interesting, your background, a lot of the advisors I've known over the years, the really good ones, are ones that have that institutional background and experience, and then they apply it to their wealth management industry. So they've kind of got the full circle of knowledge, across that sort of different types of markets and investors.
I agree.
Hey, if you're enjoying this, please subscribe on whatever platform you're using. It helps us build a community. We want to educate investors, and this is what it's all about. I start talking about, you've mentioned Brett, as far as people have influenced you. Is there one or two others? Obviously, it sounds like your parents are pretty influential early days. So it sounds like entrepreneurs ran their own business. Can you give us one or two others that sort of were important to you?
Yeah, look, definitely my parents. Yeah, I think, my parents instilled that sort of hard work ethic into me from a very early age. And I watched, Dad getting up early every morning and working till late and, running the business. So, yeah, they were excellent role models for me. I remember Dad also, when I was pretty young, he handed me a Dale Carnegie's book, How to Win Friends and Influence People, and said, read that. That'll help you a lot in life.
Yeah, that's good.
So that was good. And look, probably the other people who've been very influential in my life, I would say my uncle. He was the CEO of Siebel Furniture, which is now GWA. which and he's a pretty handy golfer as well. He was
Yeah.
he was responsible for getting me involved in golf, but he taught me a lot about business and being able to deal with people and senior executives, and he was a great role model as well as my parents, and probably obviously Brett at Kelly Partners has been influential in helping me start Kelly Partners Private Wealth and sort of guiding me and leading me through that. But I would also say Kim as well. So Kim Lim, who was one of the original partners in Kelly Partners Private Wealth. So I wouldn't have been able to build that without her as well too. So she's been very influential as well.
Oh, that's good. So you mentioned golf. So how's the golf game going? You any good?
It could always be better.
Yeah.
I got a lot going on. So unfortunately, I don't get to play as much as I'd like to, but any day out in the golf course is better than the office.
Gotcha. How important is golf to the career, you reckon?
Yeah, look, once again, I think golf has been one of those things during my career where, it actually has been important because it's allowed me to connect and play with some senior executives in places that I've worked with. So I know when I was at Citigroup and I worked at Deutsche Bank for a while as well too, I got the opportunity to play with some senior management in golf games. But I guess more recently, it's a great way to connect with clients and prospects because, you got 6 hours together basically.
Yeah.
And it's very rare that you get to spend 6 hours with your clients or a prospect and you get to talk about not only work, but, you talk about golf and life and that. So,
I do get it. Like, I'm a terrible golfer. I'll declare that right now. But whenever there's a golf day and I get invited, I'll probably go 3 or 4 a year. And it's for that reason, right? You catch up with a good group of people, talk about business, broaden your networks. Even though I sort of hit the ball straight in the water, I'm there having a go and sort of meeting different people.
Yeah.
I think it's just part of the industry.
No, it's true.
Okay, so you've had a varied career and you've touched on some of these points already, but what the biggest shift you've made in your career that brought you where you are today?
Yeah, look, I think, as I mentioned before, I think, when I moved from West LB to Citigroup Private Bank and then kind of getting out of that trading environment and then getting into an advisory role, that was a big shift. And it, to be honest, it wasn't easy either because when you've been on a trading desk for so many years, you've been there. You kind of you're a different animal, and then when you have to then go and sit in front of people and advise them on their wealth, it's a different skill set again.
Is it Singapore or Hong Kong?
I started in Hong Kong with Citigroup, and then ended up moving to Singapore after a few years.
City Private's a powerhouse.
Yeah,
up in the Asian region, so it sort of seems like a pretty good move.
Well, the thing that amazes me, having worked in the private banking industry in Asia, when I came back to Australia, I was just absolutely astounded at just how far behind Australia is. Like the private banks in Australia, just so far behind. They were just light years ahead in terms of products and platforms and reporting and banking systems and everything. And I think, we're starting to the private banks in Australia are playing a little bit of catch up now, but they're still way behind where a UBS or a Citigroup private bank or some of those large private banks operating up in the Asian region. But
there's a lot of it's technology gap down here, right? Like it's just there's not the technology and platforms to support multi-asset, multi-currency type investors. But obviously you're solving some of that with the platforms
exactly
for alternatives. So
that's it.
You're on the path. Okay, now so let's talk about things like bumps in the road, right? So often, in our industry, you need resilience. You're always going to take hits. It's sort of how you move on. Do you want to give us 2 or 3 examples of bumps in the road and sort of how you got over it and what were the learnings?
Yeah, look, it's a tough question because I think there are bumps in the road, and yes, you learn from your mistakes, and I think not all of my career decisions have been great. In hindsight, I probably look back and wish I would have stayed in jobs or roles longer than I did. So. So I mentioned I was working with Citigroup Private Bank, Citigroup was a fantastic organisation, and then I followed the guy who was sort of running Citigroup Private Bank. I followed him when he became the CEO of Deutsche Bank Private Wealth in Asia, he was a fantastic guy to work for, but, I sort of left the company to follow him. And in hindsight, maybe that wasn't a great move. So probably the bumps in the road for me have been, maybe some poor career decisions, but, it all led to other things as well too. So not disastrous, but, I think looking back, spending some extra time in some places would have been good. And I think also too, bumps in the road. Look, when we started Kelly Partners Private Wealth, we went down a lot of rabbit holes, and there were a lot of bumps because we just weren't sure exactly, how we wanted it to be and how it was going to look and how people were going to take it. And then we were using this platform, and then we changed to that platform. So it's been, this process of sort of, learning from your mistakes, going down rabbit holes, coming back out, and and just doing that. So luckily, I can say I haven't had no major bumps in the road, but a couple of small ones.
Yeah, I mean, I think that's part of the key of an entrepreneur. You got to make decisions, and you make them, and they'll be wrong. But once you've made them, you kind of got to get on with it.
That's it.
And just sort of think about, do I have to make another decision? Do I progress where I am?
No, correct.
But given where your business has got to, you've clearly got more right than you got wrong.
Yeah.
And on the positive side of it, one or two things that, about what's the two best things you've done?
Yeah, look, I think, obviously, once again, with Kelly Partners Private Wealth, we've now built it, to a great business. It's growing. We've now got 4 partners in the business, which is great. So that's growing and building, and so that's been a great success story so far. And we've still got big plans in terms of what we want to do and where we want to get to. So that's been a real positive. And look, I think probably the other real positive, in terms of what's worked is, and I certainly encourage a lot of young people listening to the podcast to do this, but I think my time working in Asia and working overseas was absolutely invaluable. So I think if anyone ever gets a chance to work in Asia or London or, the US, or any sort of, financial center, they should absolutely jump on that because, you not only learn a lot of different skills in terms of how business is done in those other countries, but I just learned so much about other cultures, and in particular Asian culture and how Asian culture does business and how the Chinese do business differently to the Japanese and that. So I think that was a big positive.
Oh, that's a good call. I was up in Singapore about 6 weeks ago, and there's a lot going on.
Oh yeah,
there's a lot of money flowing through there. There's a lot of interesting things happening, and I had a lot of interesting conversations. So I think, as a younger generation, I think it's probably worth a visit.
Definitely.
And now, sort of on the entrepreneur side of things, did you ever think you were going to be an entrepreneur?
If you asked me that question 10 years ago, I probably would have said no. But look, I think probably at some point as you grow and you mature, you probably get to a point where you go, well, just being an employee in a company, how long can that really last for? And at some point you got to have a crack yourself and start a business. Look, with the beauty of hindsight, I wish I probably would have done it earlier. So I'm fast approaching 50. So I probably wish I would have, rather than starting this when I was in my 40s, I wish I actually would probably done it when I was in my 30s. So
it's interesting. Like a lot of entrepreneurs I speak to, they're good at their job, good for working for someone, and they think, actually, I reckon there's a better way to do this, and I think I could do it better. And that's the starting seed of making that jump. And I'm sure you had those days.
That's right.
What's some common misunderstandings about successful entrepreneurs?
Yeah, I would say probably number one would be, entrepreneurs take extreme risks. Once again, Brett Kelly said to me once, he said, you need to play defense as well as attack.
Yeah, for sure.
So, he sort of said, like, if something goes wrong, you better have a backup plan. So I think, there's this misconception that entrepreneurs are all big risk takers. I think, a lot of them know how to manage risk too. Yeah. So I think that's one. I think probably the other one would be is that entrepreneurs, only think about money. I think, both you and me, we took pay cuts to start our businesses, right? And, I think most entrepreneurs I know are more interested in the equity and growing a business rather than what their pay packet is going to be every month, right? So, I think entrepreneurs, they really believe in what they're doing and have a real focus. So, money's kind of a secondary thing. And I think probably that also leads to the common misunderstanding that all entrepreneurs are rich. So, I know a lot of entrepreneurs have mortgaged their houses to start their business. So, we all got to start somewhere.
Yeah, it's funny about entrepreneurs. In a way, it's nearly forced savings.
Yeah.
You're not earning money along the way, but if you get it right.
That's right, get it right.
Maybe there's a day when you sort of...
that's the payoffs in the back end.
Things that were interesting. Hey guys, I hope you're enjoying this episode. If you want to learn more about alternative assets, there's a book here you can read, How You Grow Your Wealth with Alternative Assets. Now, back to the episode. Now, where do you see the most opportunity and risk today?
Well, clearly at Kelly Partners, we think the biggest opportunities in alts and private assets. So as you well know, we're seeing this sort of big shift away from sort of public markets into private markets, and I think the attraction there is that you can pretty much will get equity like returns with not taking equity market risk.
Yep.
And I think that's very appealing to a lot of people. But I think more importantly there too is that investors need to be very careful on manager selection and deal selection there.
Absolutely.
So picking the right horse and the right jockey becomes critical when you're playing that game. But yeah, certainly alts for us, I think, and private assets is where we see the opportunities. I think the biggest risk to all investors is investors getting scammed by dodgy investment deals and being promised very large returns, but you look at the security supporting it, or you look at the transactions, very weak. We've actually at Kelly Partners, believe it or not, we've actually probably saved a handful of clients from making very, very large investments into scams. So you would have seen the fake bond deals and the fake term deposit deals and things like that. More recently we've seen some fake NDIS property deals and things like this. So I think investors need to be really, really careful, because that's a big risk, and the amount of money people are losing to these scams is frightening. I mean, I think the last numbers I saw last year was that Australians lost $725 million to scams. I mean, that is just an enormous amount of money, and you think if that was put to better use, and that's probably one of the reasons why I got into financial advice as well too, is that I wanted to help people, avoid those disasters.
Yeah, I think that's absolutely solid point, right? Like the scam is real, and the other point is real in the private markets. It's growing, right?
Mm-hmm.
And you now got a proliferation of new managers entering the marketplace, and the hardest thing for an investor is working through what's who's good and who's bad. And it's a big challenge, right? And that's why interposing someone like yourself and your business, a lot of your role is just feeding out, getting rid of the noise to find the good managers. And that's what at times at iPartners, what we're doing. We're just assessing deals constantly, because you got to filter through a lot of garbage, to be honest. And the garbage is growing. So the job's getting harder, but it's still it's critical, have those people in your corner. Yeah, and I think that's what you're bringing to Kelly Partners, which is good.
Yeah, agree.
Now, what are your tips for driving long-term wealth?
Well, look, it's probably pretty obvious, but I think if you want to build long-term wealth, I think you need to have a long-term view, and you need to be patient. Yeah. So I don't know many short-term day traders that consistently make money. I think once again, I think there was a study done where they found that over 2 years, 97% of day traders lost money. So I think you got to be patient. You got to take a long term view. Once again, it's probably obvious, but having a proper asset allocation is really important. Having diversification is important. But I like to say to our investors as well too, is that the compounding returns is the eighth wonder of the world.
It's pretty amazing.
So you don't have to you don't have to do anything too crazy out there, or, don't go and chase the next shiny thing. I think if you can just get compounding, 7, 8, 9% returns year on year on year for 20 years,
adds up
that's
very quickly.
that's a pretty good return.
Totally agree. Now, can you share your top tips for those looking to, build a business?
Yeah, look, I think if I look at how we started Kelly Partners Private Wealth and how we built that, I'll probably start by sharing a couple of books that I read that we sort of based our business off, and they were very helpful. And the first one is, I'm sure a lot of people have read it, a lot of your listeners have read it, but Good to Great by Jim Collins.
Gotcha.
That's a book that, I guess our entire firm embraces and uses and refers to. We refer back to it as well. But that was a book that we sort of, adopted from the start, that we would use as a bit of a template. And then I think there's another book that we've used post that, is a book called Scaling Up by Vern Harnish, which really gives you some great pointers in terms of how you can scale your business up. And look, I think probably my, few top tips from those books and our learnings from using that as a basis is that, you need a really sort of credible and realistic business plan.
Yeah.
So I think, once again, I see a lot of business plans and I go, they're not realistic. It's just pie in the sky stuff, and I'm sure you've seen a lot of pitch decks as well too, where you just go, you know what, it's just the business plan is not feasible. So I think you need to have, something that's credible and realistic. I think more importantly as well too is that you need great employees. I think if you don't have great employees, and Jim Collins talks about that in his book in Good to Great, if you don't, you've got to have great people. You need to be able to develop leaders, put employees first, and then figure out, what they need to do, and then set out to achieve those goals.
Yeah.
And I think, Jim Collins also talks about, companies slowly building momentum and building that towards greatness. So he talks about the fact that, it's not just one event that makes your business scale up or get big. It's a lot of little things over a long period of time. So, the old saying is, takes you a couple of years to build a good business. It takes you 10 years to build a great business. So what we've been focusing on at Kelly Partners to scale up and build our business is just doing little things, every day, every week, just chipping away and just getting singles, not trying to hit a 6. And, all those things add up over time. And I think with employees and management and leaders, you need disciplined people. Yeah. You've got to have discipline in what you do. Otherwise, they're going to drag the organisation down. And, we also spoke about embracing technology. Yeah. So I think, top tips for, looking to level up in business, I would say, absolutely you've got to embrace technology. And that's something that we've done in our business really effectively, is use technology as much as we can to scale up.
Yeah. That's some really good points. I think that the idea of sort of equivalent of, one day at a time, one step at a time, hitting singles, it's so critical, because as an entrepreneur, you can get overrun, right? It can all become too much. You just got to bring it back to, what am I going to do today? What's my path? And I'm just going to stay on it and keep sort of chipping forward.
Yeah, exactly.
That's the very good. And stay on Kelly and Partners. So as a business, you've mentioned what you do differently. Alternative is obviously a big part of the game. And you're doing that really well. Is there anything else you do differently, and why?
Yeah, look, once again, when we were starting the business, myself and Brett and Kim sat down and we went through the whole Blue Ocean strategy book, and sort of ran that whole exercise as well. That was another book I can recommend to people to read. But, the Blue Ocean strategy is, looking at finding areas in terms of where we can play, and, avoiding the red ocean where everyone else is playing. And look, to be honest with you, we do get to see a lot of clients' portfolios from competitors and other financial advice groups and that. And what we see is that, there's so many people out there just doing the same thing, and it's all cookie cutter, and, it's all very similar, all similar asset allocations and all similar products, and, everything's kind of it's all very unsophisticated stuff. So I think what we've tried to do, obviously, with iPartners and the iPlatforms technology is, really create something that is different. We're looking at building that up and building it out. But yeah, just being able to offer something different to investors and something that's a bit more cutting edge, I think is what we're really trying to do.
It's interesting you say that. My parents went and got a financial plan the other day, and I said, I bet I can tell you what it says.
Yeah.
And I sent it across to me. It's got a little bit of equity, a little bit of fixed income, a little bit of international. It was kind of, which, was probably maybe the right portfolio for them, but it is. There's a lot of cookie cutter out there.
Yeah.
And a lot of high net worth investors looking at access to something different. And that's what you're bringing.
Yeah, and I think when with asset allocation as well, that's something we do firmly believe in. But once again, I think there's a lot of investment advisors out there that are just kind of running off the Morningstar asset allocation or the asset allocation that you kind of just get from the big research house. I think where we've tried to be different is that we're super aggressive on tactical tilts.
Yeah.
So, we could see the interest rates were clearly going to be going up. So we were just like, zero property.
Yeah,
we're zero infrastructure. We're zero long duration bonds and long duration assets. So we didn't go, we're moving from, a 10% allocation to 8.
Yeah,
it was like, no, we're just out.
Yeah,
and same with fixed rate bonds and that. We're just like, we're out. This is, you could see which way the train was going. So I think, we're very aggressive in terms of not afraid to change portfolios radically if we can see something coming.
Yeah, sounds good. Now this could be in a personal context or work, but what do you look for in an investment?
Look, I think we touched on it a minute ago when we were talking about people getting scammed. I think the one thing for us when we look at investments is that we want to work with credible partners.
Gotcha.
That's absolutely key for us. And once again, probably one of the reasons why we chose to work with iPartners was that, there's just credible people involved. But that goes across for all the asset managers that we work with. They're just good people. They're honest. They've got the runs on the board. They've got the experience. So, it would be highly, highly unlikely for us to work with a group or make an investment on behalf of our clients into a group that we had no idea who they were and they just sort of came off the street. Yeah. So we do a lot of DD around the people involved. I think also too, we invest into a lot of the products that we offer our clients. We invest into them ourselves. So, we always hear about, skin in the game and that, that's a big part of what we look at as well too. So once again, not only a manager having skin in the game, but us as a firm, am I putting my money in or would I put my money in? If the answer is no, then we, what's the point of showing it to our clients?
Easy DD question, isn't it? Would I personally invest?
Correct. I think the risk return profile just has to stack up. So once again, you see a lot of deals and you just go, you know what, it's too much risk for a little return. It's not worth it. And I think that's a big key for what we do as well too. Just making sure we're maximising returns for the risk we're taking.
Gotcha, makes sense. Hey, if you're enjoying this, please leave a review. It's really important to us. We're trying to build momentum around education, and better reviews will get more people coming and listening. Now, what's been your best investment?
Best investment? Well, there's probably two. I mean, obviously Kelly Partners Group Holdings, had the ability to participate at the IPO at $1, and I think as of today, it's trading at $4.70. So that's been
good trade.
That's been a good trade and a good investment. The other one was in 1999. I visited Silicon Valley, and I managed to get a tour of the Google headquarters. And I remember walking out of that place going, "Oh my God, this place is just, just blew my mind." So, the next day I bought some Google shares, and so you could imagine where I got in 1999.
Wow.
But that was a great trade, but I probably got out too early too.
Yeah, for sure.
And their worst investment. Look, would definitely have to be probably also in the similar vein, probably the dot-com bubble in 2000. Sure. I sort of put every sort of dollar I had into all these tech companies, and then it all just, we thought they were going to the moon and then they ended up going to hell.
That was a learning for our generation. Approaching 50. .com was our learnings and GFC was our learnings.
Yeah.
They were the two early pivotal moments for us.
Yeah, exactly. But I mean, what's weird is that a lot of those companies that blew up in the .com bubble, or their share price had got cratered. They're now market darlings. So.
Yeah. Now, what legacy are you living and leaving?
Yeah, look, I'd have to say leaving a positive impact on the communities and other people is probably more. Well, I think it is more memorable than money and tangible objects and things like that. So, in terms of how am I living that, I think you may be aware I'm involved in a community-based charity called Mongrels Men Health and Wellbeing with Tim Hewson. So that's sort of a men's mental health movement that I got involved in, and I think probably living a legacy there in terms of just want to give back to the community. Men's mental health is a real thing. There's so many suicides from young men. If I can do a little bit to kind of help that, that's something I would like to leave. And look, I guess a question I'd probably ask myself about the legacy I'm leaving is, when your physical life ends, how do you want to be remembered? Yeah. So what you do hope is, what are people going to say about you, and your lasting impact that you've made, your work, your accomplishments, your relationships, your kids. I guess in business, I'm kind of hoping that the legacy that I leave behind is a wealth management business that not only helps our clients and investors and helps them be better off financially, but also if I can leave a legacy of creating jobs and creating opportunities for the next generation. Which you're doing as well.
I think that's the end of the day. As an entrepreneur, you're creating jobs for other people.
Yep. So I think that's that, and I think in personal life, obviously I want to leave a legacy to my kids, but once again, it's probably rather than thinking about it in monetary terms, I just want to give my kids the opportunity and the pathway that I had as a kid. And once again, you hope that for every kid that they get a chance in life and an opportunity.
That sounds good. Very good. Now, what do you believe the keys to success and why?
I'd put honesty and trust right up the top, and without that, you really don't have anything. And in particular, in our business, I think. Trust is absolutely everything. Your clients are putting millions of dollars with you, and they have to be able to trust you. So that's a big thing, and not only at work but with your family and your friends as well. You want to have honesty and trust in all your relationships. But my dad said to me very early on too. He said, trust is hard earned, but it's easily lost.
Yeah.
So that's a big thing. You also mentioned too before, I would say, one key to success would be, resilience and perseverance, in business and in life again, facing challenges, learning from mistakes, picking yourself up off the canvas, pressing on. I think goal setting and planning is also really important. I meet a lot of people who they haven't even bothered to write it down on paper. Yeah. I was guilty of that myself. And I think when I joined Kelly Partners, Brett said, show me all your goals and your planning and, with your personal life. And I was like, I've written that down, So I was like, I sat down and I wrote it down. I was like, okay, this is good. So I think, keys to success, I would say, you're just setting some clear, achievable goals and directions, developing a plan and staying focused. And I think finally, for me, once again, this is something we drum into everyone at Kelly Partners, and that is continual education and reading. Yeah. So you have a guess what the average is of, how many books the average Australian reads per annum?
3?
1.
Is it really? Wow.
Yeah. So you think of that, average Australian reads one book per annum. So if you actually read 3 or 4, you'd be, three times, 4 times smarter than everyone else.
Yeah.
But I mean, I think you just, in business and in life, you do learn a lot from continual education, but also reading books. And obviously everyone who's listening to this podcast should read Grow Your Wealth Faster with Alternative Assets, written by none other, available on Booktopia.
Yeah, that's good. I mean, it's your point's absolutely fair and correct, right? In that ongoing education is critical. That's what this podcast is all about. That's what the iPartners business is all about. That's why I wrote a book about investing in alternative assets. That's why I've done too many degrees and all sorts of things, right? But I love studying, but I just think it's critical, right? Like, it doesn't matter where you are in your investing cycle. The more you understand about investing, the better informed you are and the better decisions you'll make, and the lower the probability you ever get scammed. Like, it sounds like you're the front line of protecting investors on. So I think it's very, very good points. Now, getting towards the end, we go into a couple of quick fire questions, one word or short answers. And some you might have touched on earlier, but what was your first job?
Yeah, I mentioned before, was at Nippon Credit Bank, but actually before that, my very, very first job was I worked for a bookie out at the horse races.
Wow. Yeah. That's pretty good.
Yeah, it was good.
What's a piece of advice for your younger self?
Read more.
Gotcha. What motivates you most as a person?
Making my family proud.
What's the most important skill for building wealth and why?
Patience. There's no get-rich-quick schemes out there. And, if I look at all our clients, they've got rich slowly.
Yeah, for sure. What's the most important habit for building wealth and why?
Control your spending, invest.
Yeah. What is your definition of sustainable success? How are you achieving it, and how can others?
That's a tough question.
3 questions.
It's a tough question. I would say success is not, is not through reaching the desired goal, but, through the ability to maintain this goal in spite of difficulties, challenges, and competition.
For sure.
And, I'm sort of achieving this, I guess, by careful planning and strategy and we're constantly working on our strategy of our business. It's always evolving. One thing that more recently we've done in our business is that, I read in a book where it sort of said, you look at, football teams, soccer teams, tennis players, golfers, they all have a coach. So why don't you have a coach in business?
Yeah, true.
So we're actually are working with a business coach at the moment just to help us take our business to the next level. But
That's brilliant.
Yeah.
When you're not working, we know possibly golf, but you maybe throw something else at us. When you're not working, how do you like to spend your time?
Obviously golf is a big part, but look, outside of that, I love to cook. I think my family are absolutely sick and tired of me cooking a barbecue.
Quality food.
But I love it. But yeah, look, I just love spending time with Kim and our kids as well.
That's brilliant. What's the biggest mistake people make when it comes to building business and why?
Well, the old saying is, businesses don't plan to fail, they fail to plan is true. So I think, having a great business plan, a strategy, I think is key. But as I just said, like, I think that business plan has to be always evolving, and you always have to be checking in on it and changing it and doing that. So, I as I mentioned before as well too, I think, the people involved in your business is absolutely critical. I think if you've got toxic people in your business, they're just going to drag you down. So you got to have the right people on the bus. I think you could probably say the same for incompetent management as well.
Yeah.
You got to have great management. And I think, I'd also say as well, I think, good businesses starting off, I think having and I've seen this at Kelly Partners, chartered accountants, having a great accountant in your corner is very, very critical, because they can guide you and help you as well too. So, getting that sort of forward-looking advice from a good accountant is also very handy.
I understand.
Yeah.
Very good. And now to summarise and wrap things up, what are your key takeaways and must-do actions for investors?
Well, of course, I'm going to say seek out a good, really good investment advisor. But no, honestly, I think, look, investing is complicated. It's complex. Most people probably do need some level of professional help and guidance. So, look, I think probably the key takeaways I would share is that, diversification, asset allocation is absolutely key. Getting that right, can make a big difference to your portfolio, and helping spread risk. I think informed decision making is just, we spoke about that. Like just, a lot of people don't know about lots of different things when it comes to making investments. So I think, having informed decision making is very critical to successful investing, and staying educated, continually updating your knowledge is definitely important. Long-term perspective, as I say, there's so much noise in financial markets, right?
Sure.
Like,
Yep.
got this 24-hour news cycle. You got to be able to block out the noise. So don't make knee-jerk reactions. So, one of my clients called me, recently, when things were kicking off in Israel, I was like, sell out of everything. I was just like, just cool your jets. So, we just, I think, don't sell out at the lows, because, when you're selling out the lows, that's when the smart money's buying. So I think, just being patient is critical, and resisting the urge to make, snap decisions.
Yep, that's brilliant. A couple of those books you've mentioned I haven't read, so I think I'm going to go and buy those and educate myself the next few weeks on those.
Yeah.
But thanks a lot for coming in. If anyone's interested in finding out more about Kelly and Partners Wealth Management, visit kellypartners.com.au. Thanks again, Trent.
Thanks, Travis. Look, I really appreciate you having me on the show, and thanks to yourself and everyone at iPartners. It's been a great partnership, and we look forward to working with you guys into the future.
Very good. Thank you. Hey, if you're enjoying this, please leave a review. It's really important to us. We're trying to build momentum around education, and better reviews will get more people coming and listening.